What is up YouTube, I'm Lamb Trades, and today I'll be taking you through my watch list for the week of March 12th, 2021. If you're new here, this is my weekly watch list video that I show what stocks are at the top of my list to watch out for this week. Make sure you guys hit that like and subscribe button as I'm posting content like this every single week and I wouldn't want you to miss out. Make sure you stay to the end of the video to see what my favorite play for the week is. And if you want to keep up to date with my trades throughout the week, I will leave my Discord link in the description where you can join and see exactly what trades I'm looking at every single day. To begin, let's go over the economic events happening this week. This week is a very slow week as we don't have much, but we do have Consumer Price Index on Wednesday and initial and continuing jobless claims on Thursday. There isn't anything too eventful this week. However, due to the volatility we saw last week, I think the major thing we need to watch out for are those bond yields. In my opinion, the market is overreacting a little bit as we have seen some insane moves this entire week. Let's go over what we saw this week and what we should be expecting for next week. We had a strong open in the markets on Monday, but were unable to push higher on Tuesday and Wednesday, creating this resistance trend line. On Wednesday, we did see an increase in those 10-year bond yields, which are up on the screen right now. So if we look on Wednesday right here, we saw our first increase of the week, as on Monday and Tuesday, we really were flat. As bond yields began to increase, the uncertainty in the market was certainly shown, and we saw a great sell-off in stocks. Thursday was an important day, which we can see right here, as we did bounce off of this support and ran up into Jerome Powell speaking Thursday afternoon. The market ran up into his interview as they expected him to comment on something about these rising yields. However, Powell stated that what was happening was normal and the Fed would not take action until they saw our economy coming back to life. As this happens, the velocity of money will increase and we may begin to see inflation. Once this happens, Powell said that will be the time to increase rates, but he does not see that happening for 1 to 2 years, and he still does not intend to increase rates until 2023 at the earliest. The reason for the sell-off after Powell was speaking was because investors tend to look with a future outlook. And Jerome Powell is saying that he's expecting inflation, which would lead to rising rates, and this will be bad for the market in the future. So that's why I think we saw an outflow of cash, as investors tend to focus on what will be happening then rather than what is happening now. He also said that the Fed will closely be monitoring unemployment and the inflation scenario as things begin to open up, but he does not expect us to reach unemployment lows until next year. We did see great job numbers on Friday, which caused a run-up in pre-market, but after that, it was straight down. And this has to do with a number of things, mostly the increase in bond yields and the worry from rates rising due to inflation. Right now, the market is scared and uncertain, and it doesn't help that last year at this time, we almost saw a 40% drop in the S&P 500, so people are a little on edge. For this week, I would definitely watch bond yields and how the market reacts to them. If we take a look at bond yields, we can see that 2% range really wasn't that much for bond yields before everything that happened in March. So I do think we will be recovering to that level. In addition, with inflation being projected to hit 2%, I think right now no one wants bonds, because if you take a bond with a 1.6% yield and inflation is at 2%, you are losing money. So once we hit that 2%, I do expect a large inflow into bonds, but for now I'll be watching the SPY to retest this resistance trend line and hopefully break above. If we cannot, I do expect us to fall down to this support. Stimulus was just passed in the Senate, so that should give a little boost for markets on Monday. That was a lot, and if you have any questions, please leave them in the comments. But for now, let's go over the plays that we were watching last week. The first play we were watching last week was GDX. On Friday, GDX closed at that 3090 support, and I was watching for a bounce over the next few weeks. On Monday, we saw a push of and a retracement back to the support closing above, and it served as a great entry, as we did get a pop on Tuesday to that 32 level. As long as we are consolidating above this support, I like the odds that GDX will be able to bounce and retest this resistance trend line at $35 or $36 a share. I'll be watching for a push above this 32.50 resistance, as we can hopefully follow to the upside after we get through there. The next play we were watching was BFT. We were watching to see if it had enough strength to break above that 200-day SMA, which obviously it didn't. After it didn't and showed weakness, it was then able to break below that 1450 support. As a result, this provided a 25% play to the downside, and it was a beautiful setup that allowed us to either play to the downside or add for the long term. This is a great long-term stock as it is merging with PaySafe at the end of the month. I will continue to watch for a push above that 200 SMA as it was able to close above this 1450 support on Friday, which is very bullish. And the final play we were watching was DraftKings. As you can see, this was a really rocky week for DraftKings as we had big swings in either direction. As we covered last week, that close above 61 back here was very, very bullish, and I would watch for a continuation upwards, which is what we got. 61 to 73, almost a 20% move to the upside. We saw DraftKings rally to all-time highs of $73 a share. However, as the market began to pull back, so did DraftKings. It posted some great news for this week, which included a partnership with Dish and the UFC, but was unable to recover and really took a beating. This gave a great opportunity to buy in, as last week we talked about this 200 SMA being a key support after it was able to bounce off for earnings. I will be watching for DraftKings to push through and hopefully retest that 65 area, and depending on what it does, we should be able to break through and retest all-time highs running into March Madness. But I will be sure to keep my eye and let you guys know what is going on with DraftKings. This week was very scary, however it gave a great buying opportunity to get into some of those growth stocks that sold off really heavy. The entire week I was calling out what I was buying in the Discord for the long term and how we should go about these red days, so make sure you click the link in the description if you would like to follow along with me throughout the week. Also, if you are still watching, I would really appreciate if you could like and subscribe. But for now, let's get into the plays we'll be watching this week. The first play I'll be watching is Rocket. I feel like I have to cover this because we have been calling this out one as a great long-term play for a while now, and we saw a huge move in Rocket this week. This was due to it announcing a special dividend and shorts covering. Now, many people on the news are saying it was Wall Street Bet's pump, and they could not be more wrong. This was due to Rocket offering an instant 5% gain with their special dividend, and 40% of the float was short and had to cover if they didn't want to fork up that $1.11 per share. This was absolutely not a pump, and this stock is one of the best fundamental-wise for the long term. I still believe Rocket is undervalued, and hopefully some of you were able to play it off that break of that 25 level that we talked about last week. But for this week, I'll be watching it to hold above that 25 level and possibly continue upwards. I think we're seeing some selling pressure due to people selling out after X dividend date, but the CEO hates shorts. And after seeing this stock be manipulated like it was for the past 6 months, it's safe to say that he's willing to do whatever it takes to make sure Rocket is properly valued. I like this play more of a long-term pick. However, if we could see a bounce or break below 25, I think it could be a great short-term play to either side. That being said, I hope you all don't risk more than you're willing to lose on these very volatile stocks like this, because they can swing quickly in either direction, so be careful. The next play that we'll be watching for the week is Palantir. This week was a volatile one for Palantir as it's been consolidating between that 26 and 22.5 range. I had been calling to watch for a break of either, as it will most likely serve a great continuation play. Well, we saw a break of 22.5, which brought us right down to 20 in the matter of minutes. This dip was short-lived as it was bought up very quickly. Palantir was then able to reclaim and close above that 24 support on Friday. This makes me even more confident that 24 is a great support on Palantir. If we pull it out a little longer, you can see that we have been consolidating for a little bit now. If we can get a push above 26, I think we'll be able to see a continuation to 30 and possibly retest that 200 SMA. I will be watching for this to happen this week as we have been consolidating for a little bit. If we do not see a push above and we break 22.50 again, we could fall back to that $19 to $15 range. Keep in mind, since IPO, this stock is up 150%. So that is a little risky, and it is very key to watch out to fill this gap all the way down to $10 to $12 a share. I know that sounds a little risky, but you always have to be prepared for the upside and downside on any play you make. I do think Palantir is a great long-term pick and more of a growth stock. Those growth stocks really did take a hit, and as we can see, I mean, Palantir hasn't been green for about 7 or 8 days now. So hopefully we can get a green day tomorrow and push above that 26 support to really see continuation, to maybe even get back to these $35 to $40 levels. But my final and favorite play for this week is going to be on Tesla. Now, this week was a big one for Tesla. And if we pull it back to the 4-hour, there we go, we can see that Tesla almost took a 40% decrease this week alone. As you can see, it has traded between the support and resistance lines for a while now. So after breaking this previous resistance turn support, I did expect a pullback back down to that support, which is exactly what we saw. And that's perfect because now it gives us an opportunity to play the bounce. As you can see, Tesla is trading on the support trend line that we almost perfectly bounced off Friday. If I zoom in, it's kind of crazy. I didn't put this trend line in. It was previously drawn. And as you can see, it almost perfectly bounced off. But we also have this support created from this previous resistance that was tested right here and confirmed support. So we are on this support trend line and support level. So I do expect Tesla to bounce. I think we are able to recover possibly to the 200 SMA and this resistance trend line. And Tesla's a big mover, so I wouldn't be surprised if we make that move quick. But if Tesla does break below these levels, it is likely that it will fall to that $400 to $500 range. Now, even at these levels, Tesla is crazy overvalued for how much they make, and we all know that, but it's not very smart to try to bet against these stocks. So after a break below, it would give a great setup to a play to the downside, but for now, I'm pretty bullish on Tesla for the next couple of weeks, as long as we're able to stay above these support levels. During these times with a lot of volatility, it is important not to risk more than you're willing to lose, and not to force plays. The best thing to be doing right now is investing long term and adding onto those positions that you feel will have a lot of value in the future. And the most important thing is to make sure you subscribe, or all your stocks will go to zero. It's pretty much guaranteed. However, I'm not a financial advisor, so don't listen to me. But that's all for today. I hope you enjoyed, and I will see you all in the next one.